Hello world, welcome to Group Financial Reporting. In this tutorial, we're going to be talking about measurement of non-controlling interest. Now, non-controlling interest can be measured in two ways. The first one is at fair value. It is also called the full goodwill method. Or it can be measured as the non-controlling interests proportionate share of the acquiree acquiree's net identifiable assets. Okay, and this method is what we call the partial goodwill method. Partial goodwill method. Okay, we're going to explore the full goodwill method and the partial goodwill method in detail as we go, but for now let's define what the term goodwill means. What are we referring to when we say goodwill? So goodwill is an asset representing the future economic economic benefits arising from other assets acquired in a business combination that are not individually identified and separately recognized. Okay, so that's basically the definition for goodwill. Is an asset representing the future economic benefits arising from other assets acquired in a business combination that are not individually identified and separately recognized. Same applies with what we term a bargain. So when you have a bargain, in a goodwill situation, we are saying you are paying a price which is higher than the total value of all the assets of the company, and that excess price that you have paid is what we term goodwill. In a bargain, we are saying that you are paying a price which is less than the value of the the assets of the company being acquired. That's bargain purchase. Now we want to note that goodwill or bargain on purchase is the difference between A and B. Okay, A is the sum of the fair value of the consideration transferred Okay, so my phone decides to alright, okay, so the sum of the fair value of the consideration transferred okay, so that's one, and two, we're gonna say the recognized amount of the non-controlling interest in the acquiree. Okay, and finally if the business combination is achieved in stages the fair value of any previously held equity in the acquiree. And so the sum of A and B, under B we're saying the recognized amount it's usually the fair value of the identifiable assets acquired and liabilities assumed. Okay, now we need to take note of these. I'm just gonna put it here. I'll write it very soon. So we are saying that the difference between the fair value of the consideration transferred plus the value of the non-controlling interest or any other equity that was held in the acquired company before, less the recognized amount of the identifiable assets of the company being acquired. That gives us goodwill. So the difference between A, this is your A, which is the sum of all this, minus your B, which is that one. Okay. Now we need to take note that goodwill is recognized as an asset in the statement of financial position. On the other hand, gain on bargain purchase is recognized as a gain or we can term it income in the profit and loss section. Of the statement of profit and loss and other comprehensive income and other comprehensive income in the year in which the acquisition okay acquisition took place. Obviously, this is after reassessment of fair value. Okay, now we have an example here. A Limited acquired an 80% interest in B Limited on 1 January 2008 for 1,100,000. On this date, the share capital of B Limited was 200,000, consisting of 200,000 ordinary shares and the retained earnings amounted to 800,000. The fair value of the net assets of B Limited amounted to 1 million on 1 January 2008. The market value of the shares of B Limited on 1 January 2008 amounted to 7 Rand per share. Okay. Now we want to calculate the goodwill using the partial goodwill method, or we want to calculate the share of the NCI and goodwill using the partial goodwill method, and then we'll turn to the full goodwill method after that. Now this company acquired 80%, so 80% is here, and the non-controlling interest will be holding 20%. So this 20% we are going to term it NCI. So this could be any currency like rands or dollars. Okay, this is all in dollars, in rands, so we're gonna put rands there. Okay, here we're gonna write since acquisition, and then we'll put the denomination there, and here we say at acquisition, and then we put our denomination. Now obviously the total of the non-controlling and the controlling interest will give us 100%, and that's our total. Right. Now at acquisition, what was acquired, that's basically what we're talking about, is how we're told that they acquired, A Limited acquired 80% interest in B Limited on 1 January 2008 for 1.1 million. On this date, the share capital of B Limited was 200,000. So we have share capital it was valued at 200,000, and then we will have to share this between the not controlling and interest and the controlling. So if we say 80% of 200,000, we'll get 160,000, and this one would give us 20% of 200,000, that's 40,000. Okay, our retained earnings at this date, they amounted to 800,000, and again we'll proportionately share in their ratio. We'll share them proportionately in that ratio between non-controlling and controlling. So we'll get 640 for the 80%, so 80% times 80,000, and then we'll get 160,000 here. Okay, now At this stage we need to get our totals. So the total there is 200,000, and here we have 800,000. Then 200 plus 800, that's a million. Okay, now we say this is the value of what was acquired, but one interesting thing that we need to take note of is consideration. What was paid? So now we're saying for these guys to acquire 80%, they paid how much? And then we're told A Limited acquired 8% interest in B Limited on 1 January for 1.1. Okay. So they paid 1.1, but since we are using the partial goodwill method, which says if we're using the partial goodwill method, non-controlling interest is measured as the non-controlling interest proportionate share of the acquiree's net identifiable assets. So non-controlling interest, we have 200,000 here, just the value that we have there, and at the end they won't have a share of goodwill, and then all the goodwill goes to the controlling interest, which is the difference between this 1,100,000 and 800, and that will give us 300,000 as goodwill. So goodwill will be 300,000. Now the cases, and the total here will be 1.3 million. So this is the full goodwill method, and that's how it works. The non-controlling interest will not get a share of the goodwill according to the partial goodwill method. Now if we were to do the same example using the full goodwill method, basically everything else is entirely the same. So with 80% here and 20% on this non-controlling interests, and then here with since acquisition, our denomination there, and here we have at acquisition, that's and then here is the total 100%. Okay, and then we write total there. Okay, at acquisition. Okay, so the share capital is as above. Share capital is still 200,000, and it will basically be shared between the controlling and the non-controlling interest. So 80% of this will give us 160,000 and 20% will give us 40,000. Okay, and then retained earnings. Okay, they've been said to be 800,000 as the total, and then we share them between non-controlling and controlling. 80% of 800,000 will give us 640,000, and 20% of 800,000 will give us 160,000. Okay, and then as usual we get the total of all the assets acquired. So for this one, 160 plus 40 gives us 200,000. And here the total is 800,000. And the total here is the 1 million that we have. Okay, now again we skip a line for goodwill and go straight away to consideration and NCI. Okay, at fair value in this case. Okay, so we'll start with the company acquiring, and they paid 1.1 million, which means their portion of goodwill will be the difference between 1.1 million and the total of the assets that they acquired, which is 300,000. But for the NCI, we have to take note of the fact that the market value of the shares of B Limited on 1 January 2008 amounted to 7% per share. Now we have to calculate the fair value of those shares, which is 200,000 shares times 20% times the fair value of the shares, which is that. So fair value of non-controlling interest is equal to 200,000, the number of shares, times 20%, the proportion of non-controlling interest, times the fair value of the shares, which is 7 rand, and that would give us 80,000. So that would be 280,000 here. Resulting in a goodwill of 80,000. Okay, so our goodwill there will be the total of these two, which is 380,000. And then the total of everything will be 1,380,000. Okay, so that the full goodwill method, with the full goodwill method, we value using the value of their investment, the fair value of the shares in the market. And here under the partial goodwill method, we just say the non-controlling interest should get a proportionate share in the acquiree's assets. Now the assets are valued at 1 million. The assets being acquired, and non-controlling interest is 20%. So our NCI will be equal to 200,000, which is that 200,000 we have there. We are saying 20% of the acquiree's assets. In this case, the acquiree's assets are 1 million. And we multiply by 20% to get that, which is that. Okay, by that we've come to the end of measurement of non-controlling interest, and thank you for watching. Meet you again in the next video.